the rationalinvestor.com's data brief. Today's Friday, if I'm not mistaken, TGIF. Yeah, let's put the calendar thing over here. Last day in April. Better get your taxes done if you're here in Canada. It's so funny. We've got like a big government strike. Of course, nobody can afford to live thanks to substitute drama teachers. It's absolute disaster, but Revenue Canada reminds you, you will still be penalized if you do not file on time. So this goes to show how the bankers have got the world by the short and curlies. We're all slaves. Yay, party on. Anyway, happy Friday, PMA for the win and all that. I get the impression that it's going to be a bit of a slog here through 2023. I've kind of talked to you guys at length about this, but if I understand correctly, the banking woes continue. Over on our news page, actually, I was thankful Seward. Actually, interesting how that one didn't update there. Seward did clean this up a little bit. We got rid of the socialist CNN guys. They're kind of nonsense how they just kept so political. It's not even really the news. But anyway, now API doesn't want to come in here. I don't know. Anyway, I do like to show you sort of like what's happening news-wise. I think probably the biggest thing that caught my attention this morning is the Fed actually admits guilt, which is good because, frankly speaking, I think that the, if anything, this is a really good lesson for all of you and whoever's watching this. Alan Greenspan, for a huge portion of my career, especially when I was younger, going through the process of learning this game. For the longest time, he would say, if you actually understood what I'm saying, I'm talking way too clearly. And he would always err on saying less rather than more. And I think Jerome Powell is learning this lesson the hard way. That I get the impression through that whole sickness economy. And actually listening to, there's one social media guy, George Gammon, I guess, pretty popular guy. And one of his videos that he had recently, he actually sort of put clips together of the Fed basically being 100% wrong. And Granny there, who is just basically a lifelong bureaucrat, now Secretary of the Treasury. It's remarkable how they do these things. Eh? They sort of just jump from seat to seat. If anything, what I heard was that Mr. Gensler, his big life ambition going forward is to become the Secretary of Treasury in the States. But anyway, Mr. Gammon put out some video clips showing them completely and utterly wrong. And I've often told you guys in these videos, right? Don't trade your opinions. Your opinions mean nothing. Because 9 times out of 10, your opinion's going to be wrong. Just trade your setups. But I used to always say opinions are worthless. Setups are priceless. So anyway, if anything now, by the Fed actually admitting and taking blame for some of this, they're actually leaving themselves open to lawsuits because, the Americans, they love to sue. So I wouldn't be surprised. There's that Bernie Frank guy who was part of Dodd-Frank, and he was part of, I think it was Signature Bank. I think that was the bank. I'm not quite sure. But he felt very bitter about how the feds just came along and nationalized his bank just out of nowhere. I wouldn't be surprised if a guy like that sues. And this drags on for quite some time. So the simple fact that the Fed actually admitted to wrongdoing, taking blame, this should reverberate quite a bit. I also think, too, that very much like Fannie Mae and Freddie Mac, They were government agencies that were supposed to guarantee mortgages and guarantee the backing of paper. And of course, you all saw the end result of that, big nationalization. In essence, socialism 101, communism 101. And of course, the way that you dealt with that was they had to print a whole bunch of new money and basically give anybody who did buy those guaranteed bonds their capital back. I believe that the whole quantitative easing was nothing more than the Chinese said, look, you buy these bonds back from us at face value now, or we're going to dump them in the marketplace and bankrupt your country. And so the Americans quickly came up with this phony baloney garbage quantitative easing nonsense. So I think that the end game of this is they're going to do exactly the same thing to this FDIC guaranteed insurance scheme that they created, in the last Great Reset. I think they're going to do the same thing to the banking industry that you saw happen with Fannie Mae and Freddie Mac. It feels like it, which is a little bit sad. And I suppose, doomer and gloomers and all those commodity super cycle people and all that kind of stuff, expecting $10,000 gold and all that. Well, that's an easy way for it to happen. If one by one, all these regional banks all go belly up, just like, Fannie Mae and Freddie Mac, guaranteed paper people. There's your backdrop. And I think in real time, that's being played out in the marketplace with, what is it? I'm just sitting here watching the most actives in the marketplace, but I suppose you could make the argument that these bank stocks are going to be most actives. So here's this First Republic Bank come out down another 45% on the day. Kaboom! So it's a bit of a mess, and I don't think this is going away anytime soon. And we've talked to you guys, at least I said this explicitly in recent videos. I don't know whether I really articulated it well or not, but I don't think this is a good place for new people to investing, to go dabbling and speculating. I think you're just asking for trouble playing in this space. I think you just should leave it alone. I remember when Volkswagen went through their whole thing with basically fraud around their clean diesel, that you should have left that stock alone, and it took years for that stock to eventually bottom. Boeing with the Air Max issues, I think that stock's still trying to bottom. The cruise lines with the whole sickness and them basically losing their entire business model, that's still trying to stabilize. So just the point here is 30 years into this game, actually this reminds me a lot of like Nortel Networks, and actually it also reminds me a lot of 2008 and Lehman Brothers and Bear Stearns and stuff. You're probably best just to leave this stuff alone. Just don't participate. If anything, you probably could make the argument that, of course, all of this kind of stuff reiterates our thinking about why we love Bitcoin so much. And I believe that Bitcoin was created by the 1% to give them a way to get out of the mess that they saw coming down the pike. So if you're a Bitcoiner, basically just slow and steady wins a race. The issue here, of course, is that we have rallied quite appreciably. Could we use a bit of period of pullback? Actually, there was one gentleman in the day trader room this morning. We were kind of talking about that, and he kind of nailed it, because I get the impression that he's a gold bug by definition. And I suppose if you're a crypto bull, then it's probably a similar conversation. And of course, we're talking about, bullish of gold and all that kind of talk. I suppose you could make the argument, looks like maybe inverted head and shoulders, but at the same time too, If you do have a meltdown in things like the financial services industry, and does that spill over into the broader economy? What I'm hearing a lot of people talk about now is the recession is inevitable. I actually don't think it is, but I'm a bit of a contrarian in that regard. I think what ends up happening is the economy, the broader economy, kind of flatlines, but guess who's going to be doing really well in this kind of environment? And it's all about, this is like old legacy regional banks. And this is all about new economy, and the dot-com boom darlings. We're back into that part of the cycle, folks. I don't know whether I showed you this before, but actually this is a really interesting conversation. Although I'm not quite sure why I'm looking at it there. We got a crypto. But I think you could make the argument that through the respective, the last greed cycle, Microsoft stock, of course, did exceedingly well right into the dot-com boom. Then through the fear cycle, it just basically went sideways. Then into our new greed cycle, oh boy, up we go again. And I get the feeling that we are just, climbing the wall of worry, as I said, and actually in our options club meeting, I do like the idea of a nice bull call spread. This one in particular, you could pay $15, and if the trade works, you make $60. That's a pretty good rate of return. Anyway, you can see just even over the past few days, this thing's just chugging its way higher. Also, too, I think we were all given an absolute gift of a buy opportunity there in Zuckerberg. You don't even really hear too much about Zuckerberg anymore, which is a bit ironic. But basically coming back into long-term reload zones, Brian's favorite fib. I'll tell you, if you are watching these videos to try and learn how to become a better trader, I mean, gee whiz, how many times do I have to show you these darn 78.6 levels, right? And this is on Zuckerberg. If anything, this should be a really, really good short. Why would you want to pay attention to Brian's favorite fib, BFF? There it is. And I mean, look at that. Would you have been a happy camper if you just had it in a stink bid? Maybe just, it's $100 a share for like, what, 100 shares would be, at least even 10 shares would be $1,000, right? And then boom, it jumps up to $200, sell half on a double. Now you got some free Facebook stock for the rest of your life. And all you got to do is just throw in a stink bid at a weekly Brian's favorite fib level. And interesting, full circle, right? We talk about good old Bitcoin. This is the same logic. If we, you don't see it on this chart in particular, but if I just draw a really simple fib, boobity boo, boobity shmoo, and boom, Brian's favorite fib, 78.6. If you had bought some there on that tech, I think you'd be feeling pretty good right now. You'd probably even been able to get off a double. Actually, it looks like that was 17,000, so not quite a double just yet. But you would be sitting pretty happy up $12,000 on your buy level there. So it just goes to show, I mean, half of my job here is to, my wife told me from the other side that I had the opportunity to make a positive change in the world. If it was one thing that I could get everybody in the world listening to is, gee whiz, 78.6 retracements. If I'm just going to go in and buy something from like my registered account for retirement or something like that, oh my goodness, that's sometimes just one heck of a gift. Anyway, there you go. So interesting analogy. You never know what you're going to learn when you tune into the Beamish. So these are the kind of parts of the economy. I mean, I don't know whether I would chase that there. It looks to me like the trade's probably over for now, but they're going to outperform going forward. And as I said, the banking sector, especially regional banks, now that the Fed has actually admitted culpability in all of this, I think they're actually going to leave themselves open for lawsuits, which means that there's probably going to be more nationalization and more sort of, well, yeah, we screwed up. I guess we got to go print a whole bunch more money and bail all these depositors out. And the irony of it all is they print all the money to bail the depositors out, but because they print all this extra money, more inflation, right? And you know how the game goes. So it all comes out in the wash. We all get screwed in the end. Merry Christmas. Anyway, so probably my general message is leave the banks and the banking sector alone. If you can, get yourself in tuned with tech. Of course, you know, I'm sort of preaching to the choir here with the community and good old Bitcoin. I will say though that, and I was kind of alluding to it, I never got to it in particular. If we do go into one of these sort of meltdown modes, and I was talking with one of our day traders this morning about this, you might get into a scenario. Number one, if we have one of these meltdowns where, you know, these banks are nationalized and there is a recession, like I said, I don't know whether I really think, I think what ends up happening is we're going to have inflation running at like 4 or 5%. I think the most preferred inflation gauge by the U.S. Federal Reserve Board, if we look at the Econs, there's personal consumption expenditure index. This is sort of their favorite inflation tool because it takes into account, you know, like monthly subscriptions and all that kind of stuff. Because remember, you're not going to own anything. According to Klaus, right? We're just all going to be like subscribers to stuff. Anyway, came in pretty, I'm not going to say hot, but it did come in a little bit stronger than expected. And you know, for my day trading plan and my sort of, you know, what is my daily routine as a trader, you know, I do fully plan to do the boot camp in the future. And in essence, this is basically what you're going to learn in the boot camp. You know, obviously keeping track of the day, but also, you know, how's your computer equipment? How's your diet? How's your sleep? Did anything significant happen for you? But then also too, you know, what are the econs that are going to be driving the day? So the headline here, PCE inflation eases in March. But they did show that PCE inflation slows to 4.2, lowest since May 2021, while the core index eased to 4.6, matching December 13th month low, but slightly above market expectations of 4.5. So I think that's the backdrop of sort of the inflation conversation. And, you know, with Fed funds now sitting 4 3/4, 5%, Mr. Druckenmiller told us quite a while ago that we would not see the end of this inflation problem until you saw short rates actually higher than the inflation rate. So that's a good sign. I did see yesterday, of course, Julian did this show yesterday, but I did see yesterday that the economy itself is not technically going into recession. That would imply 2 consecutive quarters of negative GDP. And if I'm not mistaken, I seem to remember just yesterday, the GDP growth rate come in at 1.1. So you can clearly see that we're slowing, but this isn't negative yet. So you might find that if we go into some sort of banking crisis tizzy, that this works its way down to the 0 line, but that's not technically recession. Where I think you're going to see recession, of course, I've talked about it at length, is everywhere else in the world. So, you know, and especially if the consumer, US consumer, which is really the only sort of main economic driving engine of the world right now, of course, which pisses everybody else off immensely. But if it's kind of floundering, then, you know, it's tough for the rest of the world. Because, you know, the theme over the past 10, 20 years, which I don't think has been a healthy theme, but it's been sort of like what they call a race to the bottom, where everybody devalues their currencies. So they sell their products into the US market and get, you know, the best possible profits from the cheapest currency. So, if the US economy is slowing down, then that's going to make the world economy pretty tough. And then, of course, you see what's going on in Eastern Europe. I mean, that's definitely not good economic times. Did see talk about Europeans feeling a little bit more optimistic about things, and maybe now the banksters over there can start getting in front of the inflation problem over there. I just don't believe that we're going to go into recession, but I definitely think that we're going to have, especially on an inflation adjusted basis, we're going to see sort of what they call, like negative, I don't know, is this real growth? I'm not quite sure how you express it. But like the growth rate minus the inflation rate is actually going to be a negative number. So Joe Sixpack is going to see, and I'm right there with you, basically a falling standard of living. Economy's not growing. Business is kind of, hello. And can you throw yourself on mute, please? Thank you. And higher prices. Prices are continuing to still stay pretty firm. So anyway, there's your backdrop, party. Today's data, like I said, I don't think it necessarily showed that we were, you can see European inflation rates much higher than North America, but you can see German numbers. Yeah, I mean, they're nothing to write home about. This is actually where I think you're going to see the problem in the world. Is not necessarily American, but you could see world growth rates come off. That's just my opinion. Look at German inflation rate still sitting 7%. Speaking of which, actually, we have German on the call here today, our level 2 instructor. I do like the idea on Fridays that our instructors and TAs and stuff, if they want to participate on the calls, is their opportunity for you and the public to get to know them a little bit better. And we have Murat on the after party call here today. Murat, was that you? Did you have your microphone on? I don't know.
It was indeed Murat, but I think he stepped away to use the little boys' room.
All right, so there you go. Anyway, so he'll be on the call talking about relative rotation. And I have to say, one of his names, relative rotation wise, if I'm not mistaken, it was quite a pretty trade. So just give you an idea of how Murat looks at the world. Let's see if I can find it. I think it was a German company that we were talking about a while ago. I'm going to have it down here somewhere. You can see I follow just a few names. Where the heck is it? Where's, there is this one. So Murat told us about this thing when it was spitting up this cute little W here. And you should look at this chart and you should say, oh, that's everything Beamish talks about. Bottom end of the range, basically giving the stock away. Beautiful double bottom on the weekly charts. And we probably even have, look at the beautiful bullish momentum divergences. Willie nice and stupid. RSI, even Sjord would like this idea. With the RSI bands, Bollinger bands on the RSI compressing. It's a pretty good looking pick, and sure enough, up she goes. So we'll be hearing from Sjord in the after party call, so be sure to tune in for that. But trying to finish this statement that I started about 10 minutes ago, let's see if I can finish it this time. And you look at this price chart, and of course, we're coming into a very, very dangerous time of year for the market. I do lots of these charts on things like Bitcoin, right? FOMC. And of course, probably people think, well, it's just a commentary on Bitcoin. No, it's a commentary on the whole risk market. So yes, obviously Bitcoin critical, component in this equation, but it's the whole broader stock market that I'm talking about here, including gold. It'll be interesting with all this banking crisis stuff to see whether the Fed actually has the gumption to continue raising rates. I've said that I think that the housing market is relatively strong right now. And the econs are coming out, the inflation econs are coming out still fairly robust. So I don't think they have any cause to lower rates, but I have heard sort of people who follow, in fact, actually, I think Murad even follows this, but like sort of the propensity for the Fed to raise rates going forward, the odds are sort of diminishing. And like I said, I think it's all about, of course, the banking situation down in the States. Me personally, I always like to watch the Fed funds versus the euro dollar market. And interestingly enough, you can see on a monthly basis, we're nowhere near any bottom. The ultimate bottom in the interest rate market, top in rates, bottom in bond prices. It's probably going to look something like this, where it's going to take quite a while. We have to get to the point where everybody has completely stopped talking about short-term interest rates and credit crises and stuff like that. And we actually start Wing out. And then you can see that the market says, all right, time to start taking interest rates down. We're nowhere near that now. It's just that simple. And I guess the thing that bothers me now is that the Fed might politically be encouraged to maybe back off a little bit. And that could be dangerous, right? Because this is our Fed spread. This is the health of the banking system. I'm actually a little surprised I don't hear more people in the market talking about this. But we used to always follow the TED spread, which is the T-bills versus euro dollars. But since the Fed, of course, took over the money system, they are following the U.S. financial crisis. Freddie Mae, Fannie Mac, basically bankrupting the United States of America government. You can see that this thing's starting to threaten to break out here. And it's almost like the market is just sniffing. It's going, okay, is the Fed about to get political here? Because I think the right thing to do is they got to stay strong on high interest rates, and they've got to squish this inflation bug. And of course, because houses have been securitized, and really what they're fighting now is they're fighting guys like that Fink guy, a perfect name. Really, interestingly enough, the Fed's activity in the marketplace, raising interest rates as much as they have, they're killing the broader economy. And they're probably killing Joe Sixpack. They are saying that things like employment, the lackadaisical attitude coming out of the sickness environment, those days are over. But the problem is how do you kill that Fink guy who's got $100 million bazillion dollars? And if he wants to keep buying houses and bidding the prices up, well, he's just going to keep buying. Caught between a rock and a hard place, it seems right now. Anyway, I for one, coming out of next week, am going to be watching this relationship. And if we start getting back into this is where guys like Stanley Druckenmiller start to get really upset. And talk about basically these crooked banksters all just destroying the U.S. economy for their own gains and their own sort of the cartel's best interest. So we'll see what happens here. You can see even in the short term, euro-dollar market's not happy. That's this orange guy. I'm not quite sure how to get him maximized. Yeah, there we go. You can see the euro-dollar market's not happy. So the Fed better not lose focus. And actually, I've heard some people, trying to get back to this conversation. If the Fed honors its obligations, that it's supposed to be, of course, trying to maintain the purchasing power of the US dollar. Yeah, right. But if they do that, then you actually should see the economy contract, and we should technically go into a bit of a deflationary spiral here, which of course is not good for something like gold prices. I guess the question you have to ask yourself now, though, is, higher highs and higher lows define a bull market. Could this thing take a month or so and just pull back? You see there's a big gap right here, and just clean things up. And of course, here we have May and June, which are historically tough times for commodity markets anyway. I mean, wouldn't that make sense? And then, bringing this full circle, I've talked to you guys recently, this Bitcoin market basically doubled off of the bottom. Could it take a few months and just clean itself up here, come back to all of these levels that we've pointed out that are key support here? And is this nothing more than just some sort of head and shoulders top getting us ready for this seasonal top? That would be this image, right? Interestingly enough, that head and shoulders is still, these highs are a little suspect. So I don't know whether I'm totally comfortable calling this just a classic head and shoulders. But, that could very easily turn into an M. Remember, this is the top of our megaphone. So the megaphone, let's see if I can do this, right? There's the top of the megaphone. If we zoom out, we're still fighting with that megaphone level. And if we go and M out here and break through this low here, you can see the next stop is basically the midpoint of the megaphone. But I might argue that through that, if we do happen to go through that sort of mini deflationary spiral, the Fed actually honors its obligations and keeps guys like Stanley Druckenmiller happy, and they don't let this relationship get out of control. Which means, of course, they are going to have to be raising interest rates. Then I think you're going to see the whole market pull back here. You can see the head. This is a daily chart. So there's the daily chart in the Bitcoin. There's the daily chart in gold. Can you see the same pattern? I can. I don't know whether you can or not. Maybe yes, maybe no. And then if we go over to like the stock market, you can also see it there. So there is that head and shoulders-y type pattern. And this is a really interesting battle point because there's actually a little head and shoulders just going on right here. But interestingly enough, with all the, the Microsofts and the Facebooks and all the tech stocks really loving it here, if anything, that in itself is kind of like to the Fed, seeing how strong the Microsofts and stuff are. That myself is actually anecdotal evidence that they can continue to raise rates. Anyway, only time will tell. If anything, I'm almost concerned that because this left shoulder's been taken out. So I don't know whether we can really call this head and shoulders anymore. But what I am thinking is that, gee whiz, this is now actually starting to look like a megaphone unto itself. And so 1, 2, we got a nice third stab up top here. 1, 2, 3, third tag of the megaphone. That's actually a trade location. 1, 2, number 3, maybe middle to the end of May, June, because that's typically when these things do seasonally bottom. Somewhere down in this area, see there's a nice gap to be filled in down below here. That does speak to me. So I am watching this, but as you can see here, we have basically reload zone. We had the counter trend rally. I was hoping that we could get a nice little M top here. But I have a funny feeling that what's going to happen here is they're going to run the top. There's the FOMC there. So they're going to run the top here. There's as Julian loves to point out, there's a whole bunch of liquidity just up top here. I think they run the top here, then through the FOMC and then back down the other side. So this is just very problematic. Yeah, is that half an hour? Yeah. So, I'm not quite sure what to tell you, good people. It's a dangerous, dangerous market. And if anything, if you're going to take a risk in the marketplace, there's an old adage, they always say you want to be buying when other people are crying, and you want to be selling when other people are yelling. I don't necessarily really hear buying or excuse me, I don't hear yelling or crying at the moment. I hear like a lot of people are just like, I don't know what the hell's going to happen. And in that kind of case, I'm a little bit leery about getting too aggressive on the buy side. I'd like to hear some pain, which sucks, right? Because you don't want to, that's the last thing you want to hear me say. You want to hear me say, oh, no, it's just business as usual. We got W's working, momentum's pointing higher. volume's pouring in. It's a bull market. Woo! But right now, I don't feel that. Interestingly enough, on the daily chart, the momentum actually is in divergence right now. RSI, I think Julian even pointed this out yesterday. RSI is kind of looking faily here. I don't see W's. I see lots of M's. So yeah, it's a dangerous market right now. I guess the last thing we'll leave you off with is looking at crypto. Our breadth indicator flashed back bullish there. And so as a result, just off this lower time frame chart, just to give you an idea of what I drew this chart up about a week or two ago, saying, what do I think is going to happen here into the Fed? And remember, we had that great call that, hey, sure, I wouldn't short here. This is probably an idea, a place to be a buyer. And sure enough, boom, the damn market jumped up. Well, I mean, conversely now, they've taken the risk out of the marketplace to the upside. Boom, that's done. Algos are still technically long here. I did have a manual, a bot, when I used to trade down in the pits, I used to trade this setup where I draw an A to B and then C to D, and I called this a bot setup. You buy at the 25 level, you can see move stop to scratch at the 50% level, because this might turn into a big M. And sure enough, that's exactly what happened. So at 50% level, I give myself permission to move my stop to scratch, and boom, I got stopped out at scratch on this trade. So big hurry up and do nothing. Way to go. So manually, I'm back on the sidelines. But the algo, as you can see here, it got its buy signal here. It's still up a bit of money. So what the hell? That's not terrible. As long as we keep painting higher highs and higher lows, I'm fine with that. But you can see the algo is just kind of humming and on. And actually yesterday we even had this come back down, and they were both exactly the same number. That wasn't enough to justify me exiting out of the long. I wanted to actually see this thing cross back down. It did tick up yesterday with this nice rally back up here. The broader market, when I looked at the broader market, everything was green. And it was like, okay, well, it looks like the market's relatively happy, because that's what this algo measures. Is it just measures the broader market's happiness index, if you will. This is the happiness index of the top 30 crypto names in the space. Not overly happy, but trying to get happier. That's probably the way that I would describe this right now. But you can see, I mean, it's a Friday. What color do you see on the screen here? I don't see a lot of green. If anything, we have a couple of these funny little sort of anomalies. I wouldn't necessarily call that a buy signal. It's just one up day for that particular name. But the vast majority of this space is definitely red. And so if the day sort of continues along like this, if anything, what we should probably do, and maybe in the after party we'll do this, is go look at things like the bear proxies in this space, see what they're looking at. Oh, notice the bear ones are actually up. If they're Wing out and they're spitting out momentum signals, well, maybe that's another tell that we ought to just cool our jets in crypto. But on balance, I could very easily find myself that this thing's going to roll back over, and I just got to hop on this recent algo trade. And that's an algo trader's life, folks. I mean, algos, they go long, they go short, they go long, they go short. And if anything, just on this particular plan, I have no opinion what's going to happen. If anything, you might even argue I'm still in sort of beta mode here. The algo is up a good 65% since inception, so it's doing well. It is technically making money, but I'm just following the chalk marks. And if we roll back over negative here, then I'll just hop off on this recent buy, and that's just the way it is. So I was actually interested last night and yesterday. I was pointing out that, hey, I really like it when the algo and Brian's bullet bots manual trading are on the same side of the market. Bots now are on the sidelines. Algo's still long, but algo could easily flip over here. I'll just follow the chalk marks. But right now, I'm skeptical at best because I have a feeling heading into the weekend, we could see a bit of weakness in this space. But only time will tell. We'll see how it goes. Okay, I think I'm going to leave the rant at that for today. Like I said, we've got Murat. Murat, are you with us here now?
I'm still here, Brian, and I share the same opinion like you.
All right, so the point here is we should have a nice after party event here with Murat. You can all get to know our level 2 instructor, our GAN aficionado, our relative rotation guru. And of course, I don't know whether you saw earlier, this was a name that you were interested in a month or two ago. And that's performing quite nicely for you. So nice translation.
Yeah, that was nice.
Okay, why don't we leave it at that? We'll have a nice little session with the public on Sunday. So if you have questions, get those questions ready. And we'll try and spread the PMA. Hopefully I can make a small positive difference in your life. Just try and understand, folks, the closing message that I really have to reiterate now for you guys is we have a really big, ugly fundamental event coming up here middle of next week. Also, too, this is an eclipse. It's a lunar eclipse. And you probably remember Luna blew up around a lunar eclipse. I think FTX blew up around a lunar eclipse. So for God's sakes, go slowly. Don't take big risks here. We got to get through this ugly period. Brian's birthday's coming up. And, if you don't know all of this kind of stuff and you don't have a plan and you don't understand risk management, well, we've got a new school term coming up. And so maybe the best thing for you to do is just get your butt into school and let us train you and teach you how to run a small business of trading effectively. Anyway, there's a nice sales pitch for you too. All right, have yourselves a great day. PMA for the win. All the best and bye for now.